All right, we're back with you here on a Friday morning. I hope you're doing well out there. I'm Marlon Boulding, your tour guide to the ag commodities. Okay, well, remember, we had the weekly export sales data that came out this morning. We'll talk about that in a little bit. Let's see how the markets are opening up here this morning with our first look. Our quotes are provided by Bar Chart. And on the corn board, as we get started today, on the corn, we're a little bit weaker. Of course, you'll find out here in a little bit when we cover the export numbers. They were not great. March corn down a penny and a half this morning. We're at 4.65, and you have December corn a penny and a half lower as well. It's at 4.97 and a quarter per bushel there. Now on soybeans, we're opening up with the March contract currently down 6.5 cents, and we're now trading at 12.61 per bushel. July is actually down 8 cents right now at 12.75. On new crop November, we're trading 7 cents lower. Last trade now 12.13 and three quarters. Meanwhile, on the wheat, let's go to the Chicago exchange. We have March wheat there firming up. We're 5 1/4 higher. Now we're at 6.18 and three quarters. Well, that's intriguing. We're off of our overnight low by about 7.5 cents right now. Meanwhile, in the Kansas City market, here you're trading March 7 1/4 higher at 6.33. Okay, well, they had been showing weakness with all the moisture moving through the plains. Now maybe they changed their mind this morning. On the spring wheat trade in Minneapolis, March is now 9 1/4 higher. How about that? 7.20 is the last trade, and July was up at 9 cents this morning. On the cotton market, we have the March contract now 38 points higher at 80.50 per pound. Well, we mentioned the weekly export sales numbers. Let's take a quick look at that data in case you missed it. Earlier in the broadcast, we were showing you that the corn, the soybeans, and the wheat sales were all below the lowest trade expectations. So not a good report at all on the grain side. Corn, only 367,300 tons. Soybeans, 202,200 tons. The wheat, only 135,900 tons. As I mentioned, the trade was expecting bigger numbers on all three. I have Chris Swift with us. He's with Swift Trading, and he's based in Nashville. He joins us right now. Chris, thanks for sharing a little time with us here on a Friday. Hope you're having a good one out there. These export sales numbers, they left a little to be desired. I know they were expected to be low, but it was even worse than that.
Yeah, it kind of is, Marlon, and I think we have to look at the time of the year. We're right at the middle of finding out whether South America is going to have their crop made or not. We saw widespread rains throughout most of the regions there, so brought a lot of relief to that. That's what initially gave us our gap down trade open on Tuesday morning. It's done nothing but follow through since. We spent Wednesday and Thursday consolidating a little. Now we're pushing down to new lows. Probably the loss of the meal market and the crush losing margin is probably the biggest deal to it. And when you look at almost an $80 decline in the meal prices over the last several weeks, now we're sitting with March meal down at $3.71, and we were almost at $4.50 just a couple of weeks ago. So it's been a pretty good size move here that we've had down, and yet beans haven't had the same percentage decline yet. So unfortunately, it leads me to believe that we can kind of pull the rug out from underneath the beans here for a little bit.
Well, you know, one thing about that, you were talking about the meal, and in fact, Argentina is expected to have a pretty good crop this year compared to the disaster that they had a year ago. Of course, that was due to a drought, but now it's been alleviated with all the heavy rainfall going on this week. Things are looking better there, and that means they should have beans to crush again this year, right?
Absolutely. And remember, we're dealing with the future. So although whatever may be at present today, all of these are based on what's taking place out into the future, and that increase in crop probably going to have more beans to crush out there. And when we look at livestock production, we already know that we're kind of at a max in the pork, not necessarily that we've maxed out, but we're at really elevated production levels in pork around the world. Poultry, maybe not as much, but clearly in the cattle market, especially here where we grain feed our beef, it's a little bit lower. We got a little bit fewer numbers to have to deal with. So all in all, if it were not for our biofuels, which seems to be not really performing very well either, there's not a great deal of increase in demand out there for those products.
Well, and I want to follow up with you on that thought here in just a moment. We'll take a quick break here, Chris. We'll come back and we'll talk about those livestock right after this. Well, let's take a first look at our livestock futures trade here this morning as we go to the live cattle board. We'll go with that nearby February contract. It's unchanged. And now it's a whole one tick higher, 2.5 cents higher at 171.15. Very uneventful here to get rolling. We have April live cattle down a nickel and now down 7 cents at 174.22. Not doing much of anything right now, just kind of spinning its wheels. On the feeder cattle market, about the same thing to the upside. You have the March now up 17 cents. We're at 225.82, and April up 12 at 231.40. The contract months beyond that are just narrowly mixed. And of course, they're so close to unchanged, they could flip-flop at any second. On lean hogs, you have the February now 22 cents higher. We're at 69.27. April up 45 at 75.40. And it's interesting here where, remember yesterday we had the huge gains on the nearby contracts on lean hogs. Today it's inverted and the gains are larger if you go further out, way out in the deferred months. So the spread seems to be reversing from yesterday, at least to some extent anyway. Let's ask Chris Swift about that. We'll talk about the lean hogs real quickly. Anything to glean from that spread change there?
You know, Marlon, I haven't seen a thing.
Okay.
I looked at it when we broke lower on Tuesday. I thought, boy, this is it. We're headed lower. And so far, we still are. We came back to levels from where we broke from, and now we're kind of stagnating here at this area. Unfortunately, I just think hogs are going into a liquidation phase. Everything that I read about it, pork production, the aspects that the industry was trying to liquidate a little bit, and then that increase in pigs per litter kind of came up and evened everything out again. So
Okay.
I think we're going to be moving a lot of pigs, and watching that sow slaughter is going to be the indicator to that.
I have to ask you, on the winter storms moving in, you alluded to the fact that it could be a big one or two. Is that going to help support the cattle market next week?
It's probably not going to do much of anything. The previous weather has been so good towards feeding cattle. This might set back just a small amount, but it doesn't seem to be that it's going to be just blistering cold or anything that would be severely harsh. Looks like just a snowstorm coming through. 1 or 2 days, those cattle will acclimate to it, and I think they'll be right back gaining the same.
Okay, well, thanks for joining us here this morning, Chris. Good to hear from you. Chris Swift of Swift Trading in Nashville.